All right, welcome to the weekend video. This is Enda here again. It's been a minute. Hold on a second. Are we recording? Yes, we are. Okay, it's been a minute, and I missed it last week, and I decided I better get to it this week. And I'm leaving it quite late actually. It's now 6 p.m. here in GMT, Greenwich Mean Time, in Ireland. And so, what are you? You're after lunch over there in the US. So I think it's probably a good time to start wrapping up the week. Um, and without further ado, actually, yes, with further ado, there, if you are interested in nightly Elliott wave analysis, if you like what I do, get over to the website bullwaves.org and check out the membership option. Right, let's get into this presentation. Okay, you'll see here on the 4-hour chart for Eurodollar. I'm going to start with Eurodollar. I am looking at a 5-wave pattern lower in wave 5 in green. So this 5-wave pattern lower, in wave 5 of 5, should lead to a pretty significant low, I think, pretty soon. And I know I've been looking for a low in Eurodollar for a few months now, but every time we have had a candidate, it's been basically wiped out. So the wipeout has happened 1, 2, 3 times now, and at this point, I think downside momentum has pretty much bottomed, and you can see that it's beginning on the 4-hour chart anyway. It's beginning to crest higher with higher lows since last June, actually. So even though we have gone lower in price, we are creating higher lows in momentum. So I think eventually that's going to turn into a pretty significant rally. We are pretty solidly oversold now. I'm looking at this 5-wave pattern here, complete wave 5 of C of B, and we've got this 1, 2, 3. We could have it could develop into a triangle, but I'm not going to I'm not going to dive onto that one just yet, or I'm not going to switch to that one just yet. We have a pretty good classic kind of complex correction here. So 3 up in A, expanded flat correction B, and then 3 up again in C. So a triple 3 in wave 4, and we moved pretty sharply down out of that yesterday. So we might have a 1-2 pattern here. If this continues lower and we break 98.99 again next week, then I think wave 5 is pretty close to a low at that point. I'm looking at where wave 1 here and wave 5 actually meet at 98.37. So I think we'll probably dip into 98 before we start turning higher again. I think this time I'm probably a little more confident that the turn up, once we do get it, will be a more significant one and a longer term one. Okay, let's get into cable. Again, it's the kind of finding a low for that final 5th wave. We got this previous one ruled out a couple of months ago, or a month ago, but that final 5th wave is coming to a low pretty soon. As you can see here on the 5-wave, on the 4-hour chart, we've got wave 3. Wave 3 in red, ABC running flat wave 4, and then a nice impulsive move down in wave 5 again. If we go to the hourly chart, I'll show you where I think we are in this pattern. We've got a wave 1 and a 2 out of screen, an extended wave 3, probably pretty close to the low of this wave 3, and then a 4 and 5. You could, at a stretch, you could call the low that we're making right now wave 3, and then we run higher in wave 4. Either way, I think we'll get a reversal probably next week into wave 4, and then a drop again into wave 5. So the alternate account probably doesn't give us much extra understanding there. It's going to form a low pretty soon. We've got a 5-wave pattern almost complete in wave 5 of 3. So I think we'll bounce and see a correction higher in wave 4 next week, and that should lead us to that final leg down, and then again that rally phase that should be coming pretty soon. Here is dollar yen. I've actually stuck with the wave 4 correction idea here, even though we have broken to a new high. I think we're probably tracing out an expanded flat, or yeah, an expanded flat correction here. So we've got 3 down in A, 3 up in B, and then we should be looking for 5 down in wave C. And I think we'll probably hit the previous fourth wave low somewhere around 126 when complete. You can see here is the hourly count. We've got that wave 3 top in brackets. We've got 3 solid waves down in wave A. I should condense this. 3 down in wave A, and then I've been tracking this 3-wave pattern higher with an extension in wave C to break to a new high. So we broke above 139.40 this week. It had all the suggestions that it was going to do it after this triangle pattern appeared, and then we broke to a new high, and maybe we've hit that the high of the pattern now. I'll be interested actually to see the Fibonacci relationship there, and I will do that right now. More or less. So actually we've broken above the 162% extension of wave A. I was looking at a ballpark figure of about 141 for a top, to close out the trend channel in wave C and to form a top. I'm not sure whether we're there yet. We might run higher into 141 on Monday and then turn lower, and that would kind of close out the picture, or create a nice, let's say, a nice complete picture for this C wave rally. And once that's done, then I will look lower into wave 1. I'd like to see wave 1, break below that wave A high there again, so 134, which is quite a decline, 600 points or so. So next week, I am going to look for a top in wave C of B, and then a turn down into wave 1 of C. Okay, the stock market. Now, so the last time I was talking to you, we were tracking the top of wave C here, and I was looking for a reversal lower. And hey presto, we got the top of wave C, and we got the reversal lower. So, does anyone else need to, let's say, I'm not going to extol the virtues of Elliott wave, but I'm going to say that not many other methods of tracking the market can call an interim high like that, can call for a sharp decline, and then call for a rally to a lower high after a sharp decline. That's exactly what the pattern is suggesting right now, is we get a 3-wave rally into wave 2 here, and it looks like wave 2 is more or less underway right now. So I think we've got 5 waves down in wave 1, and we're probably going to rally in 3 waves in wave 2 now. So I was looking for a break of that wave A high to complete wave 1, and now we've got that break of the wave A high, and that's the important thing about that is, the important point to note here is we have a break of the initial rally high, so that more or less rules out this rally since the June lows into this month's highs. It rules it out as a 5-wave pattern. So we've got a pretty critical break of an interim high there. So wave 1 is done, I think, and we'll move higher into wave 2 now, and I'll show you that in the hourly count here. So that's the wave 2 high here. We've got wave 1, 2, 3, 4, and possibly a wedge pattern wave 5. We were looking at a good sign that wave 1 was complete, or that wave 5 was complete at yesterday's lows, because we had rallied so high, or rallied reasonably off the low, and we came into the area of the previous internal wave 1 here. So this would be wave 1, 2, 3, 4, and 5. So we broke that previous wave 1 today, and that pretty much confirmed the idea that wave A of 2 was underway. So you can get quite a granular detail here, the further you go in on the wave count. So the that break of the interim high there at 31,650 or so. That suggested that wave 2 was underway, and now it looks like we've got 3 waves up in wave A. You would expect, overall 3-wave pattern in wave 2, but we've got a 3 waves up in wave A, so that would suggest we've got a flat correction. So more or less, consolidating within a range now for the next few days, and we get as we trace out 3 days, or sorry, as we trace out 3 waves. That's what you get from not doing a video for 2 weeks. Start getting tongue-tied. So we've got 3 waves up in A. We'll possibly create a higher low in wave B by Monday afternoon, I'd say, and then we'd rally again in wave C in wave 2. So we've got wave 1 down in place. We have retraced enough of the previous pattern to suggest that that is still a corrective rally in wave 2 there. So this action off the wave 2 high does pretty much, if not confirm, but it really does lead our eyes lower towards that wave 3 decline. And that wave 3 decline is what I'll be looking out for next week once we complete this second wave lower high. So I'll be looking at that previous. We've got let's say a band of resistance here between wave 4 and wave 1. So we've got between 32,370 and 32,760. Like a 400-point band there. And I would like to see wave 2 top out within that band and then turn lower down into wave 3. So that's what I'll be looking for next week. Okay, so let's move on. We've got gold. I have, how do I phrase this the best way? I have pretty much bought into the idea that we're going to see a new low, and we have pretty much confirmed that we're going to see a new low this week, although we didn't get a break of the previous low. So 1680 was a pretty important level. We seem to have, we've bounced off that level right now, but that doesn't mean that we're not going to see a break of it. I would say that that's probably just some systematic trading going on there. We didn't break any of the previous wave 1 lows, so we've got wave 1 here in pink at 1727. We've got wave 1 in black here at 1719, so we haven't broken either of those yet anyway. I will start to get a little bit more interested in a possible higher low here if we do, let's say, break at. No, I'll probably hold it until we get 1765. If we get a break 1765, I think that will probably switch on the bullish pattern again. Well, right now that bullish pattern would be down here, so we've got a possible higher low in wave 2. So we've got wave 1 and 2, maybe wave 3 and 4 now, and we should turn lower into wave 5 of 3 by next week. So we've got wave 1. I would suggest a possible relationship between wave 1 here in pink and wave 3 in pink, which brings us to 1685 for a minimum target for wave 3 in pink. I would like to see a break actually to a new low, so 1680 again in wave 3, and 4 and 5 then next week. So a new low in gold next week. I'm still looking at that 1650 level. It's a nice round number, I suppose. It wouldn't actually close out the larger trend channel here. So if we go to wave 1 and 4 there, it wouldn't actually close out the trend channel. Somewhere down around 1600 would close the trend channel, but we may not get there now, I'd say. We have the internal action is suggesting a slowing of momentum. So I'm going to go with that for next week, and a possible final low for wave 5 of C of 4 forming next week somewhere around 1650, and that would be a very interesting low, I think, to get involved in gold. Okay, so right, here is crude oil. Now we've pretty much moved to new lows this week, over the last couple of weeks, new 6-month lows. So we have wiped out the gains that we saw after the Russian invasion, the war I love the way they try and call it a special military operation. You're not allowed to say war in in Russia. God help us. You know, that's pretty woke. You're not allowed to call something what it actually is. Anyway, here is the pattern that I'm working with here is a possible 1, 2, and then a 1, 2, or a 1, 2, moving lower into a third wave down. So it's a pretty bearish pattern. So far, we haven't seen anything to rule that pattern out. We have gone relatively sideways over the last month or so, but it may well be just the quiet summertime August holiday period. July, August, we go sideways. We've gone sideways in the market anyway, so in the stock market. So we've pretty much gone sideways in crude oil as well. I am looking at a possible 1-2 pattern building here as well. So that may well be a harbinger for a sharper decline on its way. For the moment, what could you say about the crude oil market other than people have found alternative supplies now? We even see China is actually selling off its reserves, natural gas reserves. I'm not sure they're selling off the crude oil reserves, but the market has shifted. People have found new supplies, and there's new players coming into the market again. So I don't see much of a chance of a reversal higher here. I'm not saying that it can't happen, but the pattern suggests that we continue lower and maybe even sharper the downside as we continue. Okay, so let's get to the hourly count here. We have an expanded flat correction. We were watching, actually, probably the last time I was on with you, I was watching a top or looking for a top in waves in C of 2. And then this week we came down pretty sharply to suggest that we have a top now in place for wave C of 2. So that means we have wave 1 and 2, and we're looking at wave 1 and 2 again. So overall, it's a lot of 1-2s, which, if you are a genius mathematician, you will know that that number 3 follows after wave 2. So the acceleration point of this pattern should happen in wave 3 of 3 down, and that is where we should be heading next. Next week, again, I'd like to see this lower high form, in wave 2, and if that comes, I think we'll be heading pretty sharply down in wave 3 of 3, probably at the very earliest towards the end of next week, but maybe even the following week before we see that materialize. Okay, let's get into the S&P. The last time I was talking to you, I was looking for, again, a top to form in wave 2, and that's what we have so far. We popped above the 62% retracement of the previous wave 1 decline. So we've got 3 waves up in wave 2. We also saw a break. If you notice there, you can see a break of the previous. This would be the wave A high. So a break of that previous wave A high happened, which suggests that this rally is just 3 waves, and it will not turn into an impulsive 5-wave rally. So we are firmly with our eyes lower again in the wider market, and today's trade has kind of added a little bit of weight to that idea as well. So we've got that 5 waves down that I was looking for. It's a pretty nice pattern as well, actually. Wave 1, 2, an acceleration phase in wave 3, small correction wave 4, and then a 1, 2, 3, 4, and 5. So complete 5-wave pattern. The acceleration is in the right place. We formed a low by breaking the previous high of the correction. So wave A was broken, and that should have formed. That should have been let's say, a reasonable target for wave 1 down to complete anyway. So we're ticking all the boxes here as we go. And today, after kind of opining that we had a low in place last night for wave 1, we rallied sharply today. So we've got 3 waves up in A, I think, right now, and then we'll probably trace out 3 waves down in wave B into Monday, and then maybe Tuesday wave C will pop higher. Again, we've got that band of resistance between the wave 1 low and the wave 4 high. I call it about 4070 to 4100, so 30-point band there, and we've got an impulsive move lower, well on its way to being confirmed with a 1-2 pattern, and then later on next week I will be looking for an acceleration lower into wave 3 of 3, and when that comes, I think we could easily see a break to probably back below 3500 again in wave 3 of 3. And I think at that point we will probably rule out any suspicions people might have of a bottom in place for stocks. I think we'll probably we'll get close to a capitulation point, definitely by the end of September, I suspect. And how good it is, or how predictable it is that we are turning or looking at a third wave down beginning in September again. So September, that month, that rollover month that seems to come around every time. Okay, so idea next week is we move into a third of a third of a third. Okay, so let's move on here. We'll get to silver. I'll do Bitcoin as well. Here's the silver chart. We ruled out completely my possible bullish interpretation of silver from the previous time I was talking to you. I was, anyway, looking for a decline at a minimum. I was looking at a 3-wave decline. That 3-wave decline morphed. It's still actually in 3 waves, but we broke to a new low. So by breaking to a new low below 1813, I think was the level, we ruled out the impulsive nature of the previous rally. So now, at this point, I think we're going to continue lower. I'm looking at a possible final low for wave 5, somewhere down around the $16 mark, I think, at this point. And if we do get there, I think it'll most likely be a screaming good time to start buying. And I'll be watching for that. Wave 3 of 5 is not yet complete. We're looking at 5 waves down in wave 3. I'd like to see a break below $17 again to complete wave 3, and then we'll correct and then go down again in wave 4 and 5. And I will actually show that right now because I'm here. I may as well. So we'll get wave 4, a small correction higher in wave 4. Write you in, and then a final dip into wave 5. So again, somewhere around that $15 or $16 mark, I think will probably form a sustainable low for silver. And even if we do push to a new low below that, I don't think it'll go very far below that. So we may, find some sort of a concave kind of bottoming process over the next week or so in silver. Okay, let's move on. Here's Bitcoin. I was looking for a beginning of that 5th wave down. Last time I was talking to you, I was talking to you about a 4th wave correction, and then I think it was pretty doomed that a kind of drift to the side that happened over the last few months. It was doomed as a 4th wave and would be retraced completely. I think we've probably got close to wave 1 underway, and we'll get a lower high wave 2, and then accelerate lower in wave 3, and that acceleration lower will probably happen along with the decline in the stock market. Into the hourly count here, you can see 5 waves down. I was watching this ending diagonal pattern. You can go back to the previous video and see I was tracking this ending diagonal pattern to complete wave C of 4, and then we got an initial lower high and an acceleration. So we've got 1, 2, a 3rd wave acceleration, 4th wave consolidation, 5th wave down. We may there's a reasonable chance that this is only wave 3 and 4 now forming, and we move lower again in wave 5. And that may well be more fitting right now, given the kind of drawn-out nature of the correction over the last few days. Excuse me. It may be a triangle, so it might be an A, B, C, D, E triangle wave 4. In that case, then we've got an extension pattern in wave 3. So we've got 1, 2, 1, 2, 3, 4, 5, wave 3, A, B, C, D, E, wave 4. and then we should move lower again in wave 5, and I think we'll probably break to a new low again in the pattern, back below 18,800. There will be a reasonable rally, I think, in Bitcoin coming up, probably towards not the end of, maybe the end of next week, beginning the end of next week. 3 waves up in wave 2, and I'd be looking above 20,000 again, so above 22,000 probably for wave 2. But then wave 3 will come, and it'll be, hold on to your boots at that point. Where else shall we go? The NASDAQ. Looks like we've got 5 waves down on the NASDAQ. We've got this wedge pattern to complete the decline. So we've got this narrowing of the range here in wave 5. It could be an ending diagonal. I'm not quite sure about that. It depends on how you want to view it, really. So we have, I think we're close to we're pretty close to a low for wave 1 right now. And if we do obviously see a rally in the broader market next week in wave 2, then we'll probably get a 3 waves rally in wave 2 in the NASDAQ too. So right at this point in time, again, I'll be looking at the kind of previous 4th wave correction, 13,200 again. That's quite a sizable rally. I mean, it's 1,000 points. If we form a bullish higher low on Monday, then I would suggest that wave A and B are done, and then we'd run higher in wave C towards the end of next week. Again, wave 3 of wave 5 is actually facing us here. So wave 3 of 5 could easily bring us, towards 10,000 to complete. So right now, actually, I probably need to review this count here, because we do have a crossover here in wave 4. So this could be a wave 1, 2, 1, 2. Either way, it's correction higher, whether it's 4th wave or 2nd wave. I think we'll get a break to a new low, and that if this is a 1, 2, 1, 2, then that's a third of a third that we're looking at. And sayonara, folks, at that point. Okay, I think that's that. Let's move on to the most important news. If you are interested in what I do, and you should be, then head over to bullwaves.org and check out the membership. Apart from that, if you do not know the Messiah, I think you should. I remember talking about last year, talking about the war cycles turning up, and the economic woes that should be coming our way, or even 2 years ago. And here we are, wars and rumors of wars, as our Lord said. And I wouldn't suggest that this is going to get any better anytime soon. So if you are one for, if this question has been niggling at you, there's a reason it's been niggling at you. It's called your conscience. It's called, the Holy Spirit that's trying to draw you. There is a larger truth out there, and the truth is the Messiah. And I'm talking to everybody here. I'm not offering religion. This is a relationship. The only way that you can come to live, as they say, in heaven as the Father's house is if you know the Father through the Messiah. So they are one. And I'm not offering religion to you. I'm not offering, incense and candles and, getting on your knees, even though we should be on our knees anyway. But this is not what I'm offering. I'm saying to you that you can have a relationship with God, the creator of all things, through the Messiah, if you just believe. Romans 10, 9 and 10, believe in the Lord Jesus and you will be saved. And that's that. So he died for you. Your sin is paid. You get to go before the Father for eternity. And how good would that be? So that's that for this week. God's blessings to you all. If I'm still here next week, I will do a video. I don't think I'll skip another video. That's it from me. Bye-bye. Over and out. Go to bullwaves.org and check out. And I will be back later on this evening for a member of the website. Okay, bye-bye. Yeah.